Hey guys, welcome to Money Mindset and More. And today I'm going to cover how startups and small businesses can prepare themselves for tax obligations as well as bookkeeping. There are eight steps which I have noted down and I want to share with you. You might be doing some of those, but taking care of each one is extremely important because it will take significant time if you don't do these things at a required time or interval or something like that. Step one is you have to start with a very solid foundation. What I mean by that is first you have to have your business and personal expenses 100% separately. Don't mix them up, it becomes very complex in the later stages. Second, you have to be very careful what structure you are going to follow for your business because it will have a different tax implication on yourself as well as on the company. So for example, LLC will roll up everything to your income, but S corp might have rolling into your income as well as company taxes. C corp is double taxation all the time. So you have to be very careful what structure will be good for you. Rule of thumb, if you are making 100,000 net profit, definitely go for S corp or C corp or something like that. LLC will not be very useful for you in that scenario. Then you have to use proper bookkeeping. I'll always recommend using some software like QuickBook or something like that. But worst case scenario, you should have a Excel maintained with all the transactions. You should automate your processes. You should always try to integrate your payment systems, something like PayPal or Stripe. You should never take those payments like a scanned credit card and you take the numbers. Never do that. Those are not encrypted. You will be violating privacy law, something like that. Then also you have to always leverage your tax implication, what might be based upon your transactions. So you have to record most best case scenario every day, but if you don't have any software, probably end of the week or something like that. Next step is you have to stay top of your expenses. You have to categorize them. You have to monitor them regularly. You have to track them. And most important, you have to track all those transactions which might be claimed as your tax benefit or tax implication. There are many expenses which you can claim as expense, and that is basically going to have a direct impact on your bottom line. So definitely track those separately. The next is you have to understand your tax obligations, what kind of taxes you might have to pay, whether it is employment tax, state tax, local tax, any surcharge by the government. All those things you have to see, any industry specific taxes. Those has to be mapped separately and carefully because those taxes will have a direct impact on your pricing as well. So make sure that you have all those lined up. Also, I always recommend to have professional helps like CPA, financial advisors, lawyers, based upon bankers, based upon how complex your business is. But definitely have worst case scenario, you should have a CPA year long. It's not like that. Just go for tax filing and you're done. Also, you need to simplify your payroll. Never try to run it by yourself. It is really complex. ADP or Gusto, they do those processes in seconds, which you will not be able to do because you have to withhold the salary, you have to withhold the taxes from the salary of employees, you have to pay employer taxes to the government. At the same time, you have to issue all those 1099 or W2 or something like that. Those things simple, but they are not. Software does it very well, and they are software are cheap. It's not very costly. Probably $400 for a year you can get for 2 employees or 3 employees. So definitely do that. Also, you have to regularly review your KPIs. What I mean by that is you have to have your balance sheet, cash flow, profit and loss accounts. Review them regularly, monthly if not possible, definitely quarterly. Otherwise, you will get a big surprise at the end of the year and you will be struggling with the cash to run your business. Do it monthly basis, where your cash position is, how much you have to spend next month, and what is the balance will be. Those will be very good standard practice you can follow. The last one is, and probably I would say this is one of the most important, most people don't do it. You should always regularly practice as a say tax season. Never wait for tax season to come in and then you start planning for taxes. Taxes is something you have to plan every single day, because in business everything can be deductible or non-deductible based upon what kind of transaction it is, and you cannot suddenly do a transaction end of the years. For example, let's say you drove 10,000 mile in a year for business and you never claimed in a year. Suddenly in the month of December you said, I'll claim 10,000 miles in this month. Now that's a red flag. IRS will say how you can drive 10,000 miles in a month when whole year you didn't even drive 10 miles. So make sure all those things you do regularly every single month, so that you know by end of the year where you stand, what your liabilities are, what you have to maintain as a cash buffer to pay your taxes. Also, reconcile your accounts. Never wait for year end. Reconcile monthly, at least quarterly, so that by end of every quarter you know where you stand from revenue, profit, loss, returns, all those things. And it will be very easy for you to file your taxes very soon, I would say, once the season starts. So these are the 8 steps. You might be doing some of those, but go through in detail. Let me know if you have any questions, and please like, share, and subscribe. Thank you very much. Take care.